you talk about how you have come up with your hold rules, and a lot of this is what you learned directly from those seminars that Bill O'Neill was giving, and then you've kind of made them your own. So maybe you can kind of talk about that process, starting with what some of the things you learned from Bill were.
Yeah, absolutely. My goal for today was to share some holding rules. We're obviously we've come up from some first stage bases and even second and third stage bases in some cases, but then there's also some rotation where we've got some new bases popping up. And so I thought it was a good idea to review some of these holding rules so that people can decide if these are, something they want to put in their toolbox. And so,
Absolutely.
yeah, this is one of my favorite quotes from Bill. It's the sitting that makes you the money, the patience. It's investors that can be right and sit tight are rare. And I've shared many times that I would go to the level 4 and I'd see all the charts and all these great true super growth stocks. And I was like, that's what I want. I want the whole entire run. So it was always my journey to figure out how to do that. And so what I'm going to share today are directly from Bill and yourself. You helped him put together the articles, and I'm sure people have seen them before, but I'm going to really highlight some specific things on that holding. So let's go to the next slide. And, Jesse Livermore, this was also another one of my favorite quotes. It was never my thinking that made the big money for me. It was always my sitting. And, another way to think about that too, thinking, you don't want to think too much, right?
Yeah, yeah.
So,
You can
again,
outthink yourself out of a position very easily. I've done it many times.
exactly. So we figure out, decide what rules we want to follow, and then the decision's made. So no other thoughts have to, come into there. Of course, they're always going to happen anyway. Oh, Fed this, that again, or this, whatever. Oh, this much, that's so much, and then all of a sudden you go into this, the spinning wheel or whatever, the
Hamster wheel.
hamster wheel. There you go.
I'm also
So
watching Humans versus Hamsters with my son, so I
yeah.
mean that was just top of mind. So.
Exactly. So, okay, so let's go to the next one. So this,
And you know what? I'm going to make one comment on this quote
oh
because
yeah,
when Jesse Livermore, to my recollection, he actually emphasized it even more because it was, he ended with "it always was my sitting." You got that? My sitting. He kind of really drummed that point home. But
right.
let's again, for people that have seen you before. They are probably aware of your MCP, your mental capital preservation. So for those that haven't seen your math here, maybe just kind of walk them through real quickly how you look at things.
Yeah, absolutely. So these next two slides, we're just going to talk about some holding ideas for folks to consider if they want to consider that as part of their strategy. And so the first one is the mental capital preservation, and we talk about it a lot in the book. The Lifecycle Trade with my co-authors, Eve Bobach, Eric Kroll, and Kurt Dale. And I'm really going to focus a little bit more today on the math, which I haven't really talked about in my other presentations, and how it kind of relates to holding and withstanding pullbacks. But it's real simple, how much gain do you want to retain? Do you want to retain 100% of your gains? Well, you better sell right at the top then.
And
Right?
nobody's that good.
Or do you want to retain 50% of your gains? And what retention is going to help you, preserve your mental capital, be able to sleep at night and all those kinds of things. And for me, it's going to be 50%, and we'll talk about that more in a second. But it's really simple. You take the highest gain you've achieved, and then you just take you multiply that gain, that dollar gain, by whatever percent. So if it's 50%, if you have a $10 gain, so that's $5. So you want to retain at least $5. So you just add that to the price of what you paid, and then that's your stop for a 50% retention of gains.
And
Yeah, go
and
ahead.
it's really important that people realize that you've got to sacrifice somewhere, right?
Yes.
You can't have it both ways. If you're gonna have some of these big leaders, you've got to be able to sit through some pullbacks. And if you aren't able to sit through the pullbacks, okay, and you're a swing trader, yes, you can kind of multiply those gains and get a good compounded return. But you're not going to have a lot of these triple digit gainers. It just you can't do that if you're not willing to take a 10% loss from the top, not a 10% from your initial capital, but a 10% loss from the top. So yeah, those drawdowns and how much you're able to withstand is very important.
Exactly. And Bill used to say that, you're not going to always get the very top or the bottom. So it's got to be somewhere in the middle. And everyone's time frame is different. I know we talk a lot about time frames. So just to remind everybody, I'm always looking for that first stage base. And if I miss the first stage base, then I'm looking for that second stage. And then, I really want to be have very good stock selectivity, and every stock that I purchase, I'm looking at it to be hopefully that next super growth stock if I'm lucky enough to get those. And so I'm implementing these kinds of rules from the very beginning, because that's my mindset. I'm not a swing trader. My lifestyle is such that I want to sit and go bike riding, or go for walks. So maybe it's my walking or my bike riding that,
And for those
allows me
that
to.
don't know, you've actually done Ironman triathlons, which, yeah, that requires some training, and it's hard to do trading and that level of training if you're moving too fast in the market.
Right, exactly. So I really want to have my trade plan ready for the week, and I'll have, my stops set for just alert me what's happening so I can be aware. But usually my decision day will be Friday, which I'm going to talk about in a second. But even my purchases I have automatically on stop buys most often. So
Hmm.
anyway, we better get going. So the next bullet is the 10-week moving average. The 10-week moving average is, one of the key lines you guys know, because you watch IBD, and we talk about that line a lot. And so the charts we'll see in a second are directly from, again, I said William and O'Neill, and Justin helped him edit them. So we're going to look at those in detail to give you some more ideas. And then let's go to the next one. And then these are just some other ideas. So I already talked about the 10-week moving average, which we're going to, again, show in more detail. But again, I'm a long-term trader, so the 40-week moving average is really important to me. One of the holding rules that Bill used to talk about was like the first touch of the 10-week moving average after the first breakout is usually okay. It can be an add-on point, and then maybe the second or third, maybe you start to worry about more of a correction. But I also have noticed the first touch of the 40-week moving average on a super growth stock can also just be, the first one's okay, and then the second or the third one is when you really need to start to worry. So I've kind of applied that same rule from the 10-week moving average to the 40-week moving average. And in the book, we did studies on the 40-week moving average line and found that is the way to get the biggest gains, but then also the biggest drawdowns, which is why the mental capital preservation and the retention of gains is so important. And then, were you going to ask a question, Justin?
Nope.
Oh,
Nope.
okay. And then key levels, like, and again, $50, $100, those round numbers. If a stock can hold those levels when they're correcting, is an important thing that you can look at and also use as a potential stop or area to evaluate. And of course, earnings gap closes, where they close for the day after a big gain. Those can be levels to get into a stock if you missed it, but then also where you would like to see a consolidation to happen and to hold if it's going to be strong and continue moving with the market if the market is correcting, which usually is what's happening. And then you can also look at it from days, weeks, months, years. Again, time frame. And, I had to use months and years when I was looking to hold NVIDIA for a long period of time. And that's one of the things that helped me. So you can really apply these types of ideas to any time frame. But all details are important. We do still have to consider the market. We do still have to consider what the company's doing. We still have to look at their fundamentals. There are many, many details. And that's the other thing Bill O'Neill used to always say, details, details, details.
Yeah.
So these is just
Rules. Details, details, details.
Right. So we'll be sharing some details with you today, but of course they're not all one and done. You still have to consider everything.
Uh-huh.
Okay, so this is the withstanding pullbacks chart. So this is like the mental capital preservation. So what we have here on the x-axis is the percent gain achieved. So you see here we go from 0 to I believe 400, 450. And then on the y-axis, we got the percent of the pullback. And so the idea here is to give you an idea of what can you withstand based on what gain you've achieved. So that first line that goes like directly straight up, that's the gain equals the profit, right? I mean, that's the ideal situation in an idealistic world that's not real.
Right. Yeah.
Not in my
Nobody's that
world.
good.
And then the next one is the pullback percent that makes you break even, right? So of course, we don't want to have like a 400% gain and then hold it for an 80% pullback and then, give it all back, right? So that's not ideal situation either. But then look at that orange line, the not really in the middle, but in the middle. That's the 50% retention of gain line. And so you can see there with a 400% plus gain, you can withstand up to 40%. So a cup base on average, you see as I have that drawn there in the green line, 30%, flat base 15%. So if you're willing to give back 50% of your gains, you can go a long way with your percent gain achieved and really not have to give up more than what would be a normal cup with handle base. Now, obviously, bull markets, cup with handles can be deeper than that. Though those things get taken into consideration, and then that's when you have to, expand your time frame and look at other situations as well. If you're going to go for the longer term hold, like I did with Nvidia, which is what Justin and I talked about when I was on the podcast earlier this year. But this can get you, for me, I use it for, anytime I have 100% or more, I'm using this as I implement this rule. So that'll get me to almost a 30% pullback. 150% will get me exactly to a 30% pullback. And then again, the details. So then I'm looking at other things in addition to that. But that's gotten me a long way. And so this is the magic math of it. So hopefully.
Well, and a picture's worth 1,000 words. So again, it really kind of helps to see, how that works out. But just to be clear, because I want to reemphasize what you said here. This is not everything that you're applying this rule to. This
Exactly.
is the special ones, and really, it's once you have that triple-digit gain on something, it's a true market leader that you're applying this rule, and it's certainly not that you're letting something get away from you that is an early position where you don't have a lot of profit. It's not like you're going to be sitting through a 30% pullback there if you don't have the profit to justify it.